Yo, what's up guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to take a look at AliBABA. The BABA stock has gotten killed lately on a huge overreaction, so I wanted to give you my thoughts. I also wanted to go over the Chinese FUD and kind of go over some of the Chinese stocks that we own, like XPEV. That way I can also give you my BABA stock price prediction for the end of 2021. So let's jump right in. Alright guys, before we get started today, subscribe to the channel for me, hit that little bell so you get notified every time I post. There's also a link down in the description of my Patreon account. Come over and join the family. We've got an awesome community over there. You'll get access to the private Discord where we talk stocks. You'll get links to 5 portfolios so you can see exactly what I invest into. And then anytime I buy or sell a stock, up to the second I do it, I send out a notification so you can follow along. I also send out, swing trade setups, or anytime I map a chart, or I've got a watch list, or any education. Really just anything that will help us take our investing to the next level. So if that's something you're interested in, come over and check it out. I think you'll get a lot of value out of it. Day One Squad, I love you guys so much. Thank you for your support. It means the world to me. I also just raised the tier pricing. It was down around that $5 mark, but I really was just kind of giving that to the Day One Squad, kind of showing my love for being my my supporters from the get-go. So it has gone up, but even for $10 a month, I think you'll get more than enough value out of it and make your money back 10 times over again. And I'm willing to refund you if you're not satisfied. But come check it out, guys. We've got to talk about China. There is a lot of FUD going on right now in the market with the Chinese crackdown and the delisting. Guys, one thing you got to realize is this has happened so many times, right? I mean, just recently, back in November, it was the big delisting over the transparency into the fundamentals of a lot of the Chinese stocks, and everybody thought, XPEV and NEO and all these other ones were going to get delisted. They sold off pretty bad for a couple of weeks, and then everybody forgot and they ran to all-time highs and beyond. So it doesn't really bother me, guys. I mean, I'm not going to sell some of my highest conviction stocks like XPEV because of a delisting FUD that we've had before. Don't get me wrong, there's absolutely risk in with investing in Chinese stocks, but for me, it doesn't bother me. Some people don't have the stomach for it. That's fine. The way I see it though, guys, is, I mean, how do you trust anybody, especially these analysts, Jim Cramer and all these other guys? One week they're telling you to buy, as many shares of DD as you can. And then the next week they're telling you to sell off every single, Chinese stock that you own and get out, run for the hills. Guys, the relationship between China and America is way too valuable for both companies, in my opinion, for them to let it just fall apart. I think that both of the countries will end up back at the tables for negotiation to reach some type of resolution in order to prevent a big, worst case scenario, big sell-off, big panic, everything like that. The other thing, guys, is the Communist Party of China, they want to take over the world. The capital market in China could not support a lot of these up-and-coming, young companies. So the Chinese government, they know that, and it would literally chop the legs out from underneath a lot of their young, up-and-coming companies that are coming here, making a unbelievable amount of money off of U.S. Stock IPOs, and then taking that money back to China and pumping it into their economy. So, I just don't see that happening. Don't get me wrong. I think the Chinese government is extremely jealous of the big money fest going on over here in the United States. But that's exactly why America won't let it happen. America stirs the pot. Don't get me wrong. Our government definitely stirs the pot. But at the end of the day, they make so much money off of the IPOs and the fees that why would they want to just let it, fall apart? They will, again, in my opinion, be back at the table in negotiations, and they will work something out. One last thing. Even if the Communist Party of China is like, we don't care, we're just gonna, do it. We're gonna cut the legs out from underneath our young, up-and-coming, growing companies that can't be supported here in China. It wouldn't happen right away. I mean, it would happen maybe 2025 at the earliest, because there's got to be a process. They've got to give investors time. They're not just gonna say, well, done, and the stock's gone tomorrow. That it won't happen like that. If it did happen, in 2025, a lot of these, Chinese companies would end up going private, going back to China and going and listing on Singapore and London and all these other exchanges anyways. So what I'm getting at here, guys, is it doesn't bother me. I actually see it as an opportunity to pick up a lot of our favorite, highest conviction Chinese stocks at a huge discount, because it was an overreaction and investors can't handle it. It's just too much value for both countries, in my opinion, for it to just fall apart. So give it a couple of weeks. You won't even hear anything about it, in my opinion. Guys, now let's go over BABA. I really want to kind of talk about BABA because I think we've got a gem in the rough here, guys. I mean, it is at very, very nice levels. Don't get me wrong, the valuation metrics aren't perfect right now, but I think there's a lot of things that justify it. So let's go ahead. For those of you guys that do not know, this is the AliBABA site. It's really just an e-commerce site where you can buy pretty much any products in the world. It's like the Amazon of China. They also have AliExpress, where you can go on and buy in bulk. That's like the wholesale website, so you can go on and buy super discounted products in bulk, 1,000, 2,000 of them. You can customize them and drop ship them and all that. So they've got AliBABA, which is the retail side, and then AliExpress, that is the wholesaler side. So if you've never heard of AliBABA, which I would imagine most of you have, definitely go check out their website. You can buy a lot of cool stuff. But guys, I want to go over the fundamentals today and kind of show you what those look like. We won't go absurdly in depth. We'll take a glance and then we'll take a look at the chart, and I'll show you why I like it so much. First thing we want to look at, guys, this is kind of an overview, kind of gives us an idea of, okay, they've got 2.72 billion outstanding shares. The current market cap on the BABA stock is 532.7 billion. That is a massive company, guys. Big market cap there. Now, like I was saying about the valuation metrics, the PE is 23, so it's not like it's cheap by any means, even after this big massive sell-off. And the price to free cash flow, 15.18, and then the price to sales at 4.88. Now, why do I like it so much, even though the valuation metrics are, still pretty high? They're still not exactly in the range of where most investors want them. But for me, guys, I see the growth story and the growth rates and the fact that AliBABA could potentially become one of the biggest companies in the world. They already are, but the biggest company in the world. I think it justifies a little bit of a high valuation. Now, if the PE was, 90, like some of these other growth stocks, that's a different story, but it's 23, guys. That's really not bad. Look at some of these margins, guys. 41.5 on a gross profit margin, 15.2 on a EBIT margin, and 21 on a net income margin. That is absolutely huge. Then you take a look down here at the return on assets, 4.56%, and then 14.73 return on equity. So nice margins there, or nice, investment returns there. Revenue growth, guys, almost 41% in their trailing 12 months. Guys, when you grow revenue at 41% on $100 billion, that is absolutely insane. It is a heck of a lot easier to grow a company that's, 10 billion or even, 5 billion or even 20 billion at 40%, let alone 100 billion. That's crazy. So love it. Love to see that, guys. The balance sheet looks healthy. One of the number one things I look at, though, when I'm doing fundamental analysis is the income statement and the free cash flow. So let's take a look at the income statement real quick, kind of give you an idea of just how much they're growing revenue. You guys can see from right here, just in the last 5 years, guys, they went from 23 billion to 110 billion. That is absolutely crazy. The gross profit looks great. Went from about 14.4 billion in 2017 to 45.4 billion in 2021 full fiscal year. If we take a look at the net income, still also looks really good. They had a little bit of a down year right here in 2017, but went from 6.3 billion to 23 billion just about within their last 2021 full fiscal year. If we take a look at the percentage growth year over year, you can see here, look at, they're averaging 40%. When I was doing the valuation metrics, I was using even a more conservative metric, but we'll take a look at that next. Same with the net income, 61, 28, 61, even with COVID, even with the down year of COVID in 2020 going into 2021, they still, grew it at just around 10%. So really nice. Now let's take a look at cash flow, because really, guys, cash flow rules everything, in my opinion. Hands down the most important metric, because earnings can be unintentionally manipulated. Certain companies can write certain assets off and it can kind of skew what the net income shows, where cash flow is much more straightforward. It's just cash in, cash out. For those of you that do not know, cash flow is capital expenditures. You go to the cash flow sheet, come down here, cash from operations minus capital expenditures. Excuse me, it's not capital expenditures. It's cash from operations minus your capital expenditures. So as you can see here, guys, in the last trailing 12 months, or actually in the full fiscal year 2021, they had 35,000 or 35 billion in cash from operations, minus 6.3 billion in expenditures. That puts it around $29 billion in free cash flow for 2021. So, I mean, at the end of the day, guys, they are growing cash flow like crazy. What we'll do is we'll take all of these numbers and we will put them in this fundamental analysis intrinsic value sheet that I've got. This is kind of a sheet I use when I am doing fundamental analysis to take some of the data points, put it in, kind of get an idea of a discounted free cash flow model, similar type valuation metric. This is over at the Patreon. If ever any of you guys want to use this sheet, you can put data in and it gives you a overall price target. So as you guys can see here, I mean, I use pretty conservative numbers, based on what they're actually doing, and I still got a very nice price target from current levels. So as you can see, I put in the shares outstanding, put in the most recent net income, free cash flow, and then what I did is I used a 25% growth rate year over year. I used a 20% net income margin. Their net income margin is actually higher than that, but we'll just use 20 to be conservative. And then I used a 25% on the cash flow margin, which it is a little bit higher than that. So, but again, rather stay on the conservative side and see it do better. With that being said, with those metrics there, growing over the next 3, 4, 5 years, doing less than what they're currently doing, I still come up with $320 for the overall intrinsic value of the stock. I actually personally see it being a lot better than that. When I was using other metrics, I mean, I was coming up with around $400 to $600. Usually when I'll do valuation metrics and gather price targets, I'll use a very conservative end and then I'll use a more aggressive end. So anywhere from, $400 to $600 is what I was coming up with a overall price target within the next 5 years. I think 320 is actually too low. I think, that intrinsic value per share today makes sense because that was the recent all-time high. It's funny how that works. It was just at 319, 320. But I think overall over the next year, absolutely this stock could be a $450, $500 stock, no problem. They're just growing too rapidly. I mean, this could literally become one of the biggest companies in the world. So, okay, guys, let's take a look at the chart. I mean, guys, this is where the magic happens. I mean, this thing looks so good. Don't get me wrong, the fundamentals are great, right? But technically, this asset is looking really good right now, guys. I mean, you can see here from the major discernible low, the all-time, low from back here in September 2015 till, now, even till today, it has been in a massive uptrend. It ran all the way to its high point of 320 back in October of 2020 and has retraced ever since then. Now, guys, it did recently kind of have some capitulation on this Chinese FUD and just blew right through this critical inflection point right here. This was a steel wall of resistance all the way, from back here in January 2018. You can see how many times this wall was tested. January 2018, February, March, again, multiple times in April. Actually was able to break above it in June of 2018, but wasn't able to hold, fell right back below, again, July, and then again, all the way over here in May of 2019, before it actually was able to break it, kind of had that spring in November 2019, was able to back test it, tried to do it again, wasn't able to hold, fell back down below it, and then blew right past it, running all the way to the all-time high. It broke it right around April 2020, right during the pandemic. And then ever since, again, has fell down, and it could not hold. It came back to retest it. What's funny is we actually had a retest right here back in January. So that shows you right here when it came down for the second low to retest, for that double bottom, it couldn't hold, and it fell right through because of that Chinese FUD. That's what makes me feel like this is a big overreaction. It was able to find support at this other level right here from September 2019 and a couple other areas. The initial all-time high from October 2017, which is a critical level, and I actually think that is a very good spot to pick this up. Guys, we had this beautiful bullish Bartley, this massive harmonic that developed from the last discernible low right here in March of 2020, right from the pandemic low to this low right here that we just recently experienced off the last big sell-off. Guys, this is a harmonic that is showing up on multiple, significant timescales, not only the daily, the 3-day, the weekly, not to mention, guys, you are getting triple Class A bullish divergence on both oscillators, the MACD and the RSI, coming into the pattern completion zone. Now, guys, you might get a big reaction right here and get a spring to come up here, break through this level, and then we would want to see a spring back test to confirm that as support. Really just showing investors what was once a steel wall of resistance is now certainly a support level. So I have no problem picking it up right here at this level. I just recently bought it. Guys, when you have a big harmonic structure like this on significant time scales, and really looking at it, it has continued to make higher highs and higher lows. Even after this massive sell-off, you are getting that higher low. Guys, from the previous discernible high right here, you retraced 88.6% of its value. So it is literally almost a 90% sell on BABA, one of the biggest companies in the world, doing $30 billion in cash flow a year. Absolutely insane, guys. I love it. I have no problem buying this stock. You take a look at the weekly. I mean, just look at the weekly, guys. It recently broke that demand level from this massive, channel that was manufactured clear back here in January of 2016, and it is fighting its way to get back above it, also sitting right at that 200-day moving average. Guys, the other thing I forgot to mention is not only do you have, triple Class A bullish divergence on both oscillators on one time scale, like the daily, you have it on the weekly. You also have it on the 3-day. I mean, look at that, guys. It is so good. This is everything you want when you're looking at an asset for a long-term position trade or a swing trade. Really, guys, those coinciding variables like that, the divergence, the big harmonic, the big retrace at a critical inflection point from history. I mean, look at historical price action anytime it holds above this level, guys. Straight up, straight down, straight up, straight down. So really what we want to see here again is that spring back test, hold support, confirm it before advancing. That would be kind of like your type 1 reaction. If we could get a second confirmation low, but is also yet a higher low confirming this, that would be incredible. Now, guys, as far as price targets go on a big harmonic structure like this, you would obviously use B, C, and A. I actually think that, C would be my ultimate first price target, but even if you use the B point, that's $223, and then $274 at the C point, and then $320 at the A point at the top of the structure. Guys, but I actually think if you use your fib extensions, I think you could eventually even see the $355 mark at that 1272 fib extension. So that's BABA, guys. If you do not currently own it, I have no problem buying it at these levels. Like I said, I made a position today. I would have rather have seen it get down around that 185 mark, right at that critical level, but at the end of the day, $4 extra is not that big of a deal for me. Even $9, $10 on a stock like this, especially if you have a longer term outlook. Now, if you are going to break this level, like if the asset is not able to hold that 185, you are definitely dropping down to the bottom of the range, and you'll probably see 128. Now, do I see that happening? No, I don't see the China FUD going on that long. I think this is an overreaction, and investors are going to pick this stock up really quickly, at these price points. So the other thing is, real quick, with the Chinese FUD, guys, even people like Charlie Munger, aren't that worried about it. Even they say they're not worried about the the financials coming out of China. So if it's good enough for Charlie Munger, it's good enough for me. Now let's take a look at XPeng. So guys, XPeng is obviously one of my biggest positions, one of my favorite stocks, the EV company out of China. I've made many videos about it before. I will link it right here so you can check that out. We've looked at this chart many times as well. Same type of thing. Big bullish Bartley pattern. Came down. We had that first initial low, came up, got rejected, and then came down and gave us that confirmation low, which also happened to be at a critical inflection point. That was also an ice line from inception, back in August of 2020. And then we also had the double bullish divergence on both oscillators, which was class A, and it ushered in this beautiful reaction to blow right through this inflection point, where we did end up getting rejected at 45. Now, same type of thing. Chinese FUD blew right past that 200-day moving average, has already springed to jump back above that area and had a pretty massive day-to-day up around 7%. Guys, look at historical price action. I mean, it's not a lot, but anything that holds above this level, that $37, $40 range, straight up, straight down, straight up, straight down. In my opinion, I think your next price target on this, you're going to be running to the top of the range at $60 pretty quickly, in my opinion, and I think you'll see 73 by the end of the year, no doubt. So that's it for today, guys. Thank you so much for watching. I love you all so much. This video is for entertainment purposes only. I'm not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. Come join us at the Patreon, and I'll see you guys in the next one. Peace.